Ladies and gentlemen, welcome back to the channel and Merry Christmas, Happy New Year, all that good jazz. I hope you guys have a good one. Here in this video though, this is the land of YouTube, the land of opportunities of making money. So that's exactly what we are going to talk about, because who does not like a little bit of money? And hopefully we're on the verge of making a lot of it very shortly. Now, obviously no guarantees, I'm not a financial advisor, but I do want to go over the current state of the trade and when things could start to look a little bit better. There's a lot of aspects of this trade that we've talked about over the last year, almost 2 years now, that are still very much intact, that still make the trade very relevant. And I don't want you guys to forget that. And if you are in positions and you're down on those positions like I am, I don't want you to freak out, right? I know I'm sure you guys preaching to the choir here. I'm sure you guys are not. But in that sense, I kind of just want to let you guys know where we are with the trade in AMC, guys. So let's get into this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comments section, baby. And first things first, I do just want to read the headline of this article. It says AMC stock could be a ticking time bomb for short sellers at current levels. Although AMC is down sharply in 2022, the 500,000 shares worth of short interest in AMC stock, coupled with high borrow fees, could present serious risk to short sellers going forward. Now, this is a relatively new article as of December 25th today, Christmas. It's 6 days old, so it's not like an old article, but over the last couple of days you've seen AMC come out, raise capital. You've seen some things happen and the stock has went down, guys, but that's not really relevant in the grand scope of things. AMC stock goes up, it goes down, but ultimately if you buy at the lows, you tend to be rewarded very nicely. And for a couple of reasons, I think that is also the case right now. The biggest reason being that when you're buying the stock, say at these current levels, sub $5, you're buying it at a 52-week low, you know, and when you're doing that, you're taking on a lot less risk rather than buying the stock after it's already rallied. So that's one point right there. But also, what's the biggest aspect of a short squeeze in general? It's squeezability, right? Not all stocks that have a high short interest are going to go through a short squeeze. Matter of fact, most of them will not. The biggest factors that really lead to a short squeeze is activity around the stock. Are people talking about the stock? And with AMC, there's no question of that. It's not a question of if people know this trade, if people talk about this trade. It's been on the news more times than most other stocks have been, right? People know about the stock. No matter if you're Warren Buffett, no matter if you watch the news a lot in 2021, you heard about AMC, you heard about GameStop. There is a lot of power in that in and of itself. I think that fact alone eventually will make AMC squeeze. Once the price of the stock starts to go up, so on and so forth, you will get those people that just buy back in, because look at what happened in 2021. So I think that's a big aspect that a lot of people fail to realize. Another more obvious one that a lot of people tend to forget about is shorts have not covered. The short interest remains very, very high with the ups, with the downs. Shorts aren't covering on the ups. They're adding on the downs. And specifically when we head into 2023 here, this is going to be the last week of 2022, you're going to see positioning number one for 2023. But as we get into 2023 and these short positions get even more dragged out with these cost to borrow rates the way that they are, that could also put a lot of pressure on these short sellers. And just the simple fact is, the short interest continues to climb. The legal short interest that we know about, that's not even considering the illegal short interest that we don't know about, right? That's not including the option activity, which remains elevated every single week, week in and week out. Not including any of that, over 20% short interest, legal short interest, is a very high amount, especially when you have a community backing the stock, that wants to see the stock go higher. That is a very powerful thing, and I would not underestimate that the least bit. That's why S3 Partners and other hedge funds have came out and said you'd be crazy to bet against AMC, GameStop, or any other meme stock at these current levels. It's pretty easy, you know, for a short seller right now to short the stock or short any of these stocks and to lose 30 to 50% on a good week with these companies. So there is that information. Now, if you're someone that is questioning the viability or how many people are actively looking or even talking or looking or trading AMC, you can look to the option activity where you're having hundreds of thousands of contracts that are on the option chain every single week. Some option expirations, you're seeing over $500,000 contract, contracts. You're seeing hundreds of millions of dollars heading into these option expirations with AMC, and there's no sign of it stopping. January 20th, 2023 is going to be yet again another massive option expiration with probably over 500,000 contracts that will be, hopefully most of them, expiring in the money by that time. So that looks to be a pretty interesting time of the year. But nonetheless, when you put these factors together, the huge community behind AMC, the very high short interest, the outreaching spread of AMC, right? Like I said, no matter if you're Warren Buffett, no matter if you're just Joe Schmo, everyone basically knows about AMC and what meme stocks did in 2021. I said that. Did I say the option activity? All of that, right? That will culminate into one big event, in my personal opinion. As far as the timeline to that, that is the uncertain part. I do think we're closer than not. And as the markets do continue to head down, in which I do think they will in 2023, or at least in the beginning of 2023, as does everyone else think the markets are going to head down, that also puts pressure on the short sellers. Some of the biggest short squeezes of all time happened at the bottom of the markets, and I don't think this time would be any different. Think Volkswagen, think Overstock, right? Historic short squeezes in and of themselves in their own right. Volkswagen made billionaires commit suicide, right? Throw themselves in front of trains. Not saying that should happen now. Definitely not going to condone that. Please do not do that if you are a billionaire watching this video and you get blown up on a short position. But that just goes to show how bad it can get when the markets do really fall on a psychological level, which you guys have already been battling that if you've been an investor in AMC and you've had a lot of positioning in AMC. You're down in your positions. You're pretty much at a 52-week low. Unless you bought, December 22nd, you'd be up a little bit if you bought at the bottom. Other than that, you are down on your positions, unless you bought pre-squeeze and held the whole time, which I highly doubt any of us are in that boat, or at least you have not bought since then, I should say. So with all of that thrown in there, when the markets go down, it puts pressure on margin calls, right? If you have margin in your portfolio, then you know that when the markets go down, when your portfolio goes down, it puts pressure on your portfolio because your margin maintenance levels go up as your capital goes down. That's happening to hedge funds on a massive scale. In 2022, there was not a lot of positioning. A lot of people have been in cash. If you have not been in cash, you're down substantially in your portfolios. Even a 60-40 bond to stock portfolio is down 15 to 20% for this year, depending on what day of the week you are watching this video. So it's been pretty bad out there. And when you start to get a short position that goes massively against you at a time where your portfolio is going against you, it takes the questionality out of, what do I do with my AMC position? Do I cover on this position? Do I put up more collateral for this position? What do I do? And that's a lot of the times where hedge funds are forced to get out of their short positions, like they were in 08 at the bottom of the markets in October with Volkswagen, with Overstock, so on and so forth. That's the reason they actually had to cover at the highs. It wasn't because they thought the stock was going to go higher. When those stocks come up, they go down during short squeezes, but they did not have a choice. And it looks like we could be setting up for another scenario like that in, relatively speaking, a short amount of time. So I think all of that is very relevant, that everyone should still realize that as the markets go down, you know, AMC doesn't get more bearish. You know, we're not going to see this massive short squeeze, in my opinion, because the markets are going up. Maybe that might start it, but the real reason that will happen is because shorts are forced to cover. And another aspect of that is, even if shorts have a short position in AMC, you got to put up collateral for that short position. Kind of like you have margin, right? You got your margin maintenance level. You can't let your portfolio drop under a certain amount. Well, it's basically the same way when you take out a short position, but you do have to put up collateral in case a scenario comes about like this, where the markets fall and you don't want to get margin called, or AMC stock goes up and people want to make sure that they are able to collect their money, right? Whoever lent out the stock, they want their shares back. They want you to, you're going to have to pay out the difference, right? Now, if we actually take a look at the cost to borrow rates as we currently do see them, you're at about 65% cost to borrow from Interactive Brokers, the last reading we got, and there's like 0 shares available to be sold short. So that is helping to keep these cost to borrow rates up sky high as of the time of recording this video, now, which is obviously Christmas. Now, cost to borrow average, 228%. Cost to borrow max, 305%. Cost to borrow minimum at about 20%. These numbers are not fake. These numbers are not a glitch. These numbers were not a simple spike. I mean, the cost to borrow average on Thursday went from, call it 235 at the peak in the morning, dropped down to 227, and then dropped down to 173. And by the end of the day, the last couple of hours, it spiked back up to 228. That means that across different platforms and brokerages, there is seriously high cost to borrow rates. And why I like to point this out all of the time is because these are revolving. And if you guys are unfamiliar with this, I like to buy houses, buy real estate, right? Buy stocks. That's kind of my thing. Well, if you get a risky loan, right, like an adjustable rate loan, you get some kind of teaser promotion, you get an adjustable rate loan, well, those tend to be riskier. So you tend to have to pay, you know, when the rates vary, you tend to have to pay out more. Now, that's kind of the same way with short positions, right? If you go out and buy in Apple or even short in Apple, the cost of borrow rates are going to be very low because people don't expect the stock to move a lot. It's relatively safe. Like, what are the chances Apple goes bankrupt? I think there's a greater chance the world ends than Apple goes bankrupt in the next 25 years, right? Just saying, Apple's got like 300 billion in assets, like 100 billion in cash. It's not going to happen, right? People are not going to stop buying iPhones. Nobody's going to come knock Apple off that spot. So when you think about it like that, you got to think about the lending side of it. That's why cost borrow rates are going to be so low. That's why you're not going to have to cover on an Apple position as quickly as you would something else. And that's why when you're paying a 3% cost borrow rate for Apple, it's not as bad as paying a 200% cost borrow rate for AMC. Now, if Apple became this risky stock, which granted, it kind of is. Earnings aren't looking so good for Apple. If the cost of borrow rate spiked to 10%, say, still not very high, but shorts, they're going to have to pay a higher rate. It's going to be adjustable for essentially all of them unless they spark some kind of lucrative deal. These rates tend to vary. So when AMC's cost of borrow rates go from sub 20% 2 weeks ago to 200%, that puts tons of pressure on not just new shorts that want to hedge out their positions, but the old shorts that have had short positions out. And when you stay at these levels for an elevated period in time, that's a big problem for the short sellers. Now, as of right now, you're sitting at 6.65 days to cover, meaning that if all shorts wanted to cover, it would take 6.65 days to do so, which is a very long time. Cost to borrow, the trailing 3-month average at 30.54%. Estimated short interest of free float, 19.41% at the time of recording this video, guys. So hopefully this video does serve you well. Hopefully you did learn something out of this. A quick look at the technicals, like I've talked about many times now, could be setting up a triple bottom formation, or you're going to get a flush through. If you get the triple bottom formation, you're going to break above $5.05, this resistance level that we just seen back here on December 21st, as well as December 19th after we broke under it. And then you're probably going to make your way to the 50-day moving average, if not the 100-day moving average. If you flush under that, then you're in no man's land. But we did hit that low, that 2022 low, like I said, December 22nd. You rallied quite a bit from that low. You were down like 25% at one point, only closed down 7.36%. And then, sorry, I think I just coughed in the mic. And then the next day, right, on Friday, you dropped 10.39%. So it was very bad the next day. Nonetheless, you're off the lows, which is a good thing. If this week can start off bullish, that's also going to be a very positive thing, guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching. Merry Christmas, and I will see you in the next one.